All right, good morning, everyone, and welcome to today's Market Colour session. My name is Abigail, and I'll be taking the first half of today's analysis, which will be covering analysis on commodity currencies, which are NZD-USD, AUD-USD, and USD CAD. Shortly after that, my colleague is going to come on board and do his detailed analysis on indices and any other asset class that he's looking at today. But before we proceed, I would like to implore us to share this link with more people, more traders, or more want-to-be traders who would definitely benefit from these free sessions that we host at the VFT Academy on a daily basis. It will not take us too much time, 30 seconds, and you are done. So I believe, trust that you're sharing the link right now, so we can definitely proceed into looking at what the market has in store for us. But before we go into commodity currencies, I want to take a quick look at the dollar index just to have a clear overview of what the dollar is currently doing. And I'm going to take a quick look at the weekly time frame. What I see here is following what price did. For a long time, we saw all of these ranging moves in the market, and then now we've seen a BOS that happened at this particular structure point. So price broke below, gave us some sort of retest, and it has tanked further down. But while it was selling, it left a lot of momentum that price will most definitely refill 50%, 100% of it before it continues in the royal direction. Having that in mind, I go down to the daily time frame to look at what I have in store here as well. And I can pretty much see certain levels or certain area points that I expect price to return to before we see whether the DXY continues to the downside. So I've marked out the first point of interest that I'm looking out for. I'm going to go ahead and mark out this as well. And just above this, we have some sort of IOFED right around the zone. So there's a lot of different POIs that the DXY could trade into. There's a lot. So POI 1, POI 2, price already tapped into this, so I'm going to leave it alone. And then we now have this third POI right here as well. Okay, so what am I now seeing on DXY based off this brief analysis that I just did? I'm thinking DXY is going to give us a temporary retracement back into the zone. So we could be seeing temporal buys of the dollar into the zone and then a continuation, or it's going to break above the zone, target the next resistance point, because this is a daily, so this is a resistance point that price could buy into right around this level before it drops, or trade into, you know how POIs work, trade into the next POI. So yes, this is what I think is going to happen short term. I'm looking at short-term buys of the DXY into this imbalance to fill it up before we see a continuation of the dollar sell. Okay, so having that in mind, we can now proceed to look at AUD-USD and AUD-USD on the weekly time frame. So what's the predominant structure that I can see here? Clearly to the downside, price has done all of this, and until price comes to take out this structure point before we can now say, okay, AUD-USD weekly structure is now forming a buy. But for now, it is still very much clearly to the downside on the weekly time frame. On the daily time frame, the same thing, structure is still predominantly to the downside. Our price has now traded into this resistance point. So very soon we should see a sharp move that should come and take out all of the stop losses that are hovering around this level. It should happen very, very soon. Regardless, this is what we can now have, and this is where price or structure currently is. So looking at the most recent structure, which is point A to B, we now have a pullback level that we can go ahead and draw our Fibonacci swing from. We can decide to now do this, mark this from point A to B, and wait for AUD-USD to do something like this, sell back into an OTE according to the ICT traders, sell back into an OTE, either this zone or this zone. This could be a better one because there is a fair value gap here. And then are we now going to see a move upward that's come up and take out these stop losses that are moving around this level? Very likely. On the 4-hour time frame, what do we see on the 4-hour time frame? I still see the same thing. My bias of daily is still maintained even on this TF. Still expecting price to give us temporary retracement into a premium level. And then see that's fair value gap marked out on the higher time frame is here still. So I'm going to go ahead and draw that out. Expecting price to trade down below here, and then we should see buy opportunities continued. And if price is able to trade lower than this, we know that the next level it's going to be coming for is where we saw this POS, where we had this impulse move that took out this structure point, and then this last bearish candle that we have here. This could now be a second point of interest that could attract price to itself, for price to trade all the way into this POI or this other zone, and then we see the AUD-USD buy continuation. So please take note of this level point. You can see the price at the right-hand side of the chart, 0.61222 to 0.60666 is our first point of interest, and then the second one being 0.59867 and 0.59473. That's our zone. Okay, so let's fine tune and go down to lower time frames and see if we have something else happening. Same thing, our bias is still very much maintained, even down to the 1 hour time frame. So right now we are just waiting for price to retrace into the zone. Of course, now I know that there are people who are already asking questions and thinking, can we take the retracement of this particular trade back? Retracements are always considered low probability setups. So if you want to take a retracement of AUD back into the zone, what you would like to wait for, what I recommend you wait for, is to see consecutive BOS, consecutive breakout structures continued down to this point. So from what I see here now, right, we had consecutive higher highs and higher lows being printed. This was supposed to give us a higher high, but it failed to do so. And then we saw a BOS right around the zone, right? So I could now mark this out as a point of interest. What I'm marking out is the last bullish candle before we saw the red candle that took out that structure point. So if we mark out this zone and see, I'm waiting for price to retrace back into the zone and then attempt a sell-off of AUD back all the way into our optimal trade entry, right? So we'll be waiting for that. But remember, it's a low probability setup. So two things, either you wait for confirmations to take the sell back into this POI, or wait for price to trade into the zone, wait for the fair value that to be tapped into our 61.8% Fibonacci level, and our flip zone, which are now 3 confluences around the zone, for price to retreat back into these levels, and then we'll be taking the AUD USD back. Okay, so next on our watch list is now the NZUSD. So structure is very similar to what we saw on AUD-USD. Predominant structure on the weekly time frame is still to the downside. So of course we should be looking for sell opportunities, right? Okay. However, when you now go down to the daily time frame to fine tune, you see that structure was able to take out this particular zone. So we had a BOS around this level that we can now say, okay, price is starting to form a new structure point. Are we going to see continued buys of the NZUSD before the weekly time frame eventually catches up, which is very likely? Okay, so because this is a structure point that took out this particular level, the previous low high that we had, lower high that we had, I'm going to go ahead and mark out the zone. Marking out the zone, waiting to see if price is going to retrace back to test this particular zone before it continues to buy. But this is the daily time frame. It's going to take a very, very long time. So let us fine tune and go down to lower time frames. On the lower time frames now, our time frame is clearly buy, looking at our most recent price action, most recent structure. So I'm going to go ahead and use my Fibonacci retracement tool to calculate certain levels where I expect price to retrace into before we see a continuation of this move, right? So buys, where do we see NZUSD retracing into? Most likely somewhere around the zone, 50 to 61.8% fib level. But if it is a strong moving trend and the market is moving with so much momentum, it is possible we'll just see a retracement into that 8.2% Fibonacci level, and it's just continue to buy. Regardless, we're watching out for this level to see what happens, and then we are going to react accordingly. 2 hour time frame is maintaining what we saw on the 4 hour time frame, and so is the 1 hour time frame. So similar to what I did on AUD-USD, once take retracement trades, you know what to look out for. Wait for more breakout structures so that you're more on the safer side. More breakout structures to the lower time frame, to the downside rather, and then you could look for retracements back to test those zones, and then you can take the sell of NZUSD back into this POI. But our highest probability sector looking for price to retrace back into this level, and then we are now going to start to buy NZUSD. So if this NZUSD buy is continued, eventually you'll see our weekly time frame catching up. You can already see here as well, this structure point was taken, but price traded into some sort of resistance around the zone, hence why it is reacting downward now, right? So I expect it to retrace downward, and then we could see a buy, or we will see rather a buy continuation of NZUSD. Okay, so the final asset class we're looking out for is now the USD card. So USD card has been selling for a while. However, on our weekly time frame, our major structure is still very much to the upside, and all of these sales are looking like minor structural movements, temporary retracement, right? Okay, having that in mind, let's go down to the daily time frame. Daily time frame, you can see the sell is still happening, it's still digging deeper to the downside. So what am I now going to go ahead and do now that I have seen this? I'm going to go ahead and mark out certain level points, POI1 to, or rather point A to point B, and mark out a good enough zone that I expect price to trace into somewhere around here. And then we're going to be seeing a move like this and a sell continuation of the USD CAD asset class. Same thing we're seeing on 2-hour time frame, same thing we're seeing on the 1-hour time frame. Expect some temporal buys back into this POI, and then we're going to continue selling USD CAD. And that is pretty much it for my general bias on AUD USD, NZD USD, and USD CAD. When price retraces into those points of interest, we are now going to be fine-tuning using our confirmation entries to take those trades. Now, some of us may not really know what those confirmations are, and that's why we host all of these monthly sessions to teach you how we take specific entry points, we call them sniper entries, specific entry points when trades or when the market trades into our specific point of interest, right? So if you want to be able to identify how exactly you're supposed to trigger your trade when it trades into your point of interest, simply send us a DM and we're going to guide you through. Okay, so Forex performance, what do we see? What is the economic theme that we see playing out right now on the daily? We're going to wait for this particular one to refresh and let us see what is currently leaving the market. Pro tip, when you use tools like the PVs, you can use it to your advantage in terms of mixing asset classes that are stronger versus the weakest, right? So as traders, you want to be able to pair a weak asset class versus a strong asset class together to take certain trading decisions. So it hasn't finished refreshing, but you can see pound being the strongest and CHF being the weakest. So you could decide to take a trade on GBP versus CHF, right? Same thing, USD is strong, JPY is weak. USD JPY is an asset class that you can now start to look out for to take certain trade opportunities. So this definitely helps as well. Other than the asset class we're looking at, you should pay attention to joining or pairing weak currencies versus strong currencies to make more money from the markets. While this is loading up, let's take a quick look at Forex Factory to have an idea if we have any economic news release coming out that would have an impact on the chart. Today is the 17th of April, so let's go all the way downward. Okay, so what do we have coming out today that would impact the asset classes we looked at? AUD employment change came out earlier in the day and it came out lower than expected. But in the real sense, what we want to see is actual greater than forecast. So we'll now see more strength going into the AUD currency, but this came out lower than, so temporal weaknesses should be expected on the AUD chart. It didn't really have much impact on the chart, else we would have seen very, very long weeks. Then we also had unemployment rate. It was predicted to come out at 4.2%. It came at 4.1%, right? But this is now the reverse. So actual less than forecast is cryptocurrency, unemployment change, unemployment rate, basically saying that you're expecting a certain amount of people to be unemployed, but a lower percentage of those people are now unemployed, which is kind of fair for the economy. So that has already come out. What is the next news release we can have our eyes on? There's one coming out on the euro. If you trade your euro currency pairs, look out for that. There's also another one coming out on euro again, ECB press conference. The news releases we have coming out on the dollar are very weak. These are all low impact moves, so they will not have too many moves on the chart. It won't cause too much on the chart. So this has finally refreshed. On the daily time frame, you can see the pound being the strongest today, the dollar being the next strongest, and then we now have the other two safe haven currencies, JPY and CHF, being very weak. So we do not have a clear economic theme. Everything is mixed right now. But we're going to keep watching, and eventually we should see a clear theme play out. Everything is mixed. We have our news currencies right there, financing currencies, safe haven currencies, all jumbled up. So let's keep watching out to see how they eventually play out and be able to take advantage of these ones. Okay, so without taking too much more of our time, let me know if you have any questions, and if this was helpful to you, please do well by leaving an emoji, a thumbs up, a full stop, anything you want to, just so I know that it was helpful to at least one person. And then shortly after that, we're going to go into the next session, discussing indices and touching also on fundamentals. All right. Okay, then, so we're going to be moving into the next session of today's analysis. Thank you, Roma. Thank you so much for joining. Thank you, Mr. Ayuba. Please do not go anywhere. We'll be back in less than 1 minute. Cheers and God bless.
Good morning, everyone, and welcome back to the Market Colour session. In this session, we'll be looking at what is happening in the US market, the US 30, US NAS 100, and also S&P 500, right? We'll be looking at what is happening in those markets. It has been a very turbulent time in the market. So far, so good. We've been experiencing serious, sell-off in the market. And of course, as you know, this is as a result of the tariff plan that's been going on quite for some time now. And yesterday we saw, the retaliation where we stopped on Tuesday. We said we are waiting for the response of the White House as regards the tariff that was slammed on them, or that's 145% from China, and we're waiting for how they're going to respond to that, right? As of Tuesday, and yesterday we got that response, which wasn't so nice at all, right? It wasn't nice at all. They've increased their own to over 200%, right? Tariff, that's from the White House, increasing tariff to over 200%. That's a lot. That is a lot. And also China just said they're not going to, respond back to them because it looks like it's a number of game now. Anybody can just call any number, and the rest of the market is just going to respond rapidly to those figures, right? But one of the things we see clearly also is that China is responding actively in terms of company exporting to the US, like the Boeing, right? They've restricted the Boeing from exporting, airplanes to the US, and US also slamming tariff across board for not even tariff now, restrictions and duties, right? Like indeed, Nvidia now has been given $5.5 billion, a charge if they should go ahead with export of their, microchips to the Chinese markets. The same thing with Tesla. Tesla waiting for some, imports. They can't do that now to begin their production in the US. This is quite serious in the market, and the market is looking very, very unstable, right? Trading this market in terms of technical analysis now, it's looking more and more unclear, especially if we're looking at holding long term in this market. It's very, very unclear. It's a serious trade war that is going on now, unlike the one that's happened in previous time. China now has, strength and the capacity to, go head to head with the United States, and it's quite serious. All right, so let's look at what the market is doing from technical analysis. Of course, there'll still be technicals to be analyzed, but then we know strongly that what is pulling this market seriously at this point now, it's very, very fundamental, right? We're expecting, as at the last time, we're expecting price to fill up this fair value gap, expecting price to fill up this fair value gap. This inefficiency, like a gap, jump, market open or so, and then we saw that jump. We're expecting price to come, fill it up, and then we start seeing that sell to the downside. Of course, we know already that our fib stance still holds, right? Because of the correction we've seen, right? We expect the market to tap into this zone and then start selling off again. And with what it's looking like, we might see resumption on, tariff earlier than the 90 days pause that was given, right? If you remember the last time we spoke, that was last week, we were excited because there was a 90-day pause across board for tariff. But now it seems the White House is going back on their word, especially with China, right, to really go one-on-one with them concerning this tariff. And it's quite unfortunate. The market is very, very unstable, except for gold, right? Gold has been rallying. All of this tension, gold and other safe haven asset has been on the move, right? They have been rallying to the upside. You can see it clearly, right? Because of this economic tension. So, of course, already, it's not to repeat ourselves. The best pair to trade now during this type of season, during this type of economic tension, is to just sit on gold and then stay there, right? Correlation, you can use correlations also in terms of EU and US. Why EU is a bit stable, US market is still having issues. So you can see it on both EU and say GU also. But the best pair, the best bet at this point in time will be trading gold, the gold market, right? So on US 30, when we come to 4-hour time frame, we see that structure has been very, very dicey, right? Although we have an order block here, I have another block here that's been rejected, and then this serves as liquidity, but also we are not even sure because in the next, all of this move yesterday was as a result of the announcement that was made, right? The sell-off that we saw yesterday. This was actually supposed to move, like actually begin to rally to the upside. But then that announcement from the White House was very important. It's very important. That's why I didn't even look for opportunity to trade this market yesterday. We had to see what their response would be for us to determine what the direction of the market we should expect, price to go. Right. So right this morning, price is already tapping on another block that's been tested before, but then probably going to the 1 hour time frame, we'll see a better and a clearer opportunity. A better opportunity for me would be to keep selling this market until we see a proper compromise, right? Both parties saying, hey, it's okay, let's come together and let's meet at the middle, see what we can do, right? Except for that, I think it's best we keep selling US debt, or unless we see something dramatic that happen, right? A dramatic move by the White House to overhaul, this effect in the market, then we can now start buying, right? Before we wanted to start buying because of the 90-day pause, but now it doesn't look like it's any it's hold any strong effects in the market, right? Seeing what is happening so far, so good, right? So for that, this morning I saw like a box pattern opportunity for a sell in the market, which I'm looking at currently, although it's M15. I'm looking at this morning. Let me see if this will act as inducement for me. This will act as inducement for me. The only concern is that on the daily time frame, we expect a price still move to the upside, right? We expect a price still move to the upside. So that's a bit concerning. We have this entire move on the daily time frame, this entire gap. On the daily, this one is even the first gap. The second gap is this one, which is still far from where price currently is, right? But intraday kind of trade, this is what I'm looking at in 15 minutes. Right? I'm looking at this, a sweep, a break to the downside, and then there's a fair value gap that has not been filled, right? Fair value gap, other block above it, the fair value gap, and then another block just above it, which I expect price to tap and then start selling to the downside again. I'll be looking at what the market is going to do today. They have this analysis across board for US 30 and US 100. They have similar price action now, almost about say 90% correlation, right, in terms of how they move. So I'll be looking at what the market is going to do this morning around these zones, right? Not be quick to enter. I'll just have it marked out. So of course, you can also look for M5 entries. Once price comes to this zone, look for the same pattern on M5 again, right? Meaning price enters this zone, and then we look for the same box pattern inside these zones for us to start selling off. But then apart from that, nothing really clear, except that we want price on the long term, right? Following analysis before, want price to move to this zone, and then start selling off. But from what we have currently, how the market has been behaving, any news can shift. The market can turn from any place, literally, right? Significantly, and without even respecting any area that we've mapped out before as point of interest. All right, that being said, let's move to US 100. That is NASDAQ. You have the same analysis also for NASDAQ. So on the NASDAQ, we have this zone marked out, our swing marked out. So on NASDAQ, it's also obvious that our previous analysis was to see a rally on this move to the upside. However, because of the strong fundamental that has been leading this market, we might want to pause on that and then work with what we have now. There's no assumption. We can't assume again that this rally is going to happen because of the 90-day tariff. A new tariff has been announced, and then China is also going to respond. In fact, China is already responding to it, right? Giving their own companies in China restriction from transporting or exporting their goods to the US. So with that being said, we can't expect that rally again, except we see something very, very dramatic happen in this market. Instead, what we will be looking at, we'll be looking at selling off, right? The selling of the market. So on the H4 time frame, what do we have on the H4 time frame? There's a gap. Of course, market has filled it a bit. Market has filled this gap in a way on the 4 time frame. However, by the time we go to the 1 hour time frame, we want to see what's happening then. Okay, this is another kind of box strategy, except that we have 2 box pattern here, right? The first one being this, which this was like a feeling of this previous low. This is not that clear. I would rather want to go for the second one, right? Which is this, right? It shifts to the upside and then it breaks the downside and then price coming back. So we have 2 points of interest actually on this zone for the sell-off, right? So we might just be patient to see which one price is going to react to, or price reaction from that level. A good way of measuring what is going to happen is to wait for price to come into that zone and then look for lower time frame, reactions. On the M5, how is price reacting? This is a pure classic, market structure and liquidity sweep kind of strategy, right? Even the one above too, the same thing. So we expect that price is going to tap into this zone, use this as a liquidity to be consumed, and then we should see some reaction inside this blue box for us to start selling to the downside, right? And so I'll be watching out for this today, seeing how market is going to react inside this zone on the M5 time frame, right? Or even on M1. I want to see box pattern because this market is really, really volatile now. I want to see box pattern on the 1 minute or M3, M5 time frame. That's a 3 minute, 5 minute time frame for me to now start, selling off, right? Once we see the same thing happening here, of course, price is fractal, it's going to happen. If this level is going to hold, it's going to happen. So once that happens, we can start selling off. And with that, we have a more precise entry and also with tighter stop loss in place to help us, right? Okay, that being said, let's move to S&P 500. Almost the same analysis across board for them. On the daily time frame, they are very much bearish, right? We are bearish as we speak in the market. You can see that's changed. Price direction has changed from the market structure. It's very clear and obvious. We're having higher highs and higher lows before. Now it's lower lows and lower highs, right? Currently, price is printing lower highs, and by the time you come to the H4 time frame, it's also the same thing with what we have on NAS 100, right? Almost the same thing we had on NAS 100. However, by the time we look to the 1 hour and 15 minutes, we see the box pattern strategy, box pattern setup. Let me put it on 15 minutes instead of 1 hour. Okay. By the time we look at the 1 hour time frame, 15-minute time frame, sorry, we'll see that we have a box pattern strategy, right? A fair value gap that has not been filled before. Of course, okay, it has been tested once, right? But then we still have other block here that has not been filled. And then a sweep of market structure to the downside. It's a sweep of market structure to the downside, right? This a break of market structure, sweep of liquidity here, even above here, right? Price swept liquidity all through. Let me show us what I mean so that you have clear understanding. Sweep of liquidity, right? A break to the downside. Have a break to the downside. And what next? Add the other block just above here, right? You have another block above here, and then you have what? This one serving as liquidity, right? So there's a fair value gap just in it here, but then this candle here, this has tested into it, right? I've tested the fair value gap once. It can still go back into that. Let me just mark it out so that you understand what I'm trying to say, right? I have this fair value gap here. So we have a candle that's entered into it once, this one here, and okay, price is also reacting from the fair value gap. So we can Either just choose to wait and see how the reaction is going to go, or wait properly for price to come into this order block, right? Price tapping into this order block for it to start selling to the downside, right? So all of this analysis that we've made, and so far this area of interest we've marked out, they are tied to the current happenings in the market, right? One thing I would love us to all do is to get on social, right? That's Donald Trump's social media platform, and then subscribe to major himself, and other, what's it called, news platform there, because they often tend to write strong commentaries which reflect truly in the market there, even before it gets to, what's it called now, Twitter, that's X, right? So get on that platform, ensure that you are updated. If you want to trade US30 and NAS 100, it's not a must. In fact, this period is best to, like we mentioned earlier, to stay on good. But then if you're really, really interested in catching moves in this market, then you want to be in touch with fundamental first-hand information, right? So that will help a lot, staying in touch with what the market is doing, and that will give you that level of confidence to start even taking position in the market. So this analysis that we've made starts with the fact that everything remains the same until we see something very, very dramatic again in the market in terms of a release from White House or from the Chinese government. That being said, this is where we wrap it up for today. Do we have any question? It's a good time to ask our question. Do we have any questions so far? So good, Mr. Shafa, Mr. Yuba, Mr. Oladipo, Omojo. Do we have any question? Was this analysis helpful? Let me know in the chat box. Do we have any question? Do you have any question? So that we wrap it up for today, and then we'll meet again by 2 for the New York session. 2 o'clock for the New York session. Do we have any question? I'm waiting for our responses in the chat box. Ayuba, Oladipo, Omojo, Ashafa. Any question? All right, beautiful. In the absence of no question, we'll be calling it a day, and we'll meet again by 2 for our New York Market Colour session. Ensure you use proper risk management. Ensure that you are, if you don't have your setup, if you don't see your setup in the markets, there's no point taking trade, right? Staying out of the market is also a position, right? Thank you so much for joining, and my name is Demola Global. We'll meet again by 2 for our New York Market Colour section.